Based on the provided data for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The recent price history demonstrates volatility, with fluctuations both upwards and downwards. The forecast price suggests a slight upward trend over the next week, but it remains within a relatively narrow range. Considering this, a long position could be initiated at the entry price of $62,500, aiming to capitalize on the predicted upward movement. A stop-loss order should be placed at $60,700 to minimize potential losses if the price unexpectedly drops. Target price for this trade could be set at $63,900, taking advantage of the forecast's higher end, while leaving room for potential price adjustments. This strategy allows for participation in the potential short-term upside of Bitcoin while managing risk effectively. Based on the Ethereum price history and forecast, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend, with recent declines suggesting potential bearish pressure. However, the forecast indicates a slight upward movement in the coming week, potentially offering a buying opportunity. Considering this, a long position could be considered. An entry price around $2,440, aligning with the recent lows and the potential for a bounce back, would be appropriate. The stop loss should be set at $2,380, slightly below the recent support level, to mitigate potential losses. The target price could be set at $2,580, aiming to capture a potential upside move towards the resistance level. This strategy allows for a balanced approach, capitalizing on potential upward movement while managing risk through a defined stop-loss order. Based on the provided price information for Solana, a short-term investment strategy appears most suitable. The 2-week price history shows a fluctuating trend with recent dips. While the forecast suggests a slight upward movement, it remains within a relatively narrow range and doesn't indicate a strong bullish signal. Given the support price at $143.12 and the resistance at $152.9, there is limited room for significant price appreciation in the short term. Therefore, a short position with an entry price around $148, a stop loss at $152, and a target price of $144 seems prudent. This strategy aims to capitalize on the potential for a minor price correction within the next week, aligning with the forecast and historical price fluctuations. It also incorporates risk management by setting a stop loss to limit potential losses if the price unexpectedly rises above the resistance level. Given the provided price information for Ripple, a cautious short-term investment strategy appears most suitable. While the historical prices show some volatility, the recent 2-week trend indicates a downward movement, aligning with the 1-week price forecast that projects continued declines. The support price at $0.527 suggests a potential floor for the price, but the resistance at $0.5612 indicates limited upside potential in the near term. Therefore, a short position on Ripple is recommended for a short-term investment horizon. An entry price around $0.545, near the predicted lowest point in the forecast, would be prudent. The stop loss should be set at $0.555 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.525, aiming to capture a portion of the anticipated decline before reaching the support level. This strategy prioritizes risk management and capital preservation while seeking to capitalize on the prevailing bearish sentiment in the short term. Based on the provided price history and forecast for Cardano, a short-term investment strategy appears most suitable. The historical prices show some volatility but generally trend downwards over the past 2 weeks. The forecast also suggests a slight downward movement in the coming week. This indicates a potentially bearish short-term outlook. Given this, an investment strategy could involve taking a short position on Cardano. A suitable entry price would be around $0.36, aligning with the current price and the forecast. The stop loss could be set at $0.37, slightly above the entry price to limit potential losses if the price unexpectedly rises. The target price could be set at $0.34, taking advantage of the anticipated downward movement and staying below the support price of $0.342. This strategy aims to capitalize on the short-term bearish sentiment surrounding Cardano. Given the price trends and forecast for SU, a medium-term investment strategy appears most suitable. The historical prices demonstrate an upward trajectory, but the recent price action shows some consolidation. The forecast suggests continued upward momentum, with prices potentially reaching $1.98. The support price at $1.7743 provides a solid foundation for potential buying opportunities, while the resistance at $1.8424 presents a potential ceiling for the short term. Therefore, a long position in SU is recommended for a medium-term investment strategy. An ideal entry price would be around $1.79, slightly above the current price and below the resistance level. The stop loss should be set at $1.77 to protect against a potential pullback. The target price could be set at $1.93, aiming to capture a portion of the anticipated price increase. This strategy allows for potential profit while managing risk within a reasonable time frame. Based on the provided Filecoin price history and forecast, a short-term investment strategy appears most suitable. The recent price history exhibits a downward trend, with the current price hovering near the support level of $3.526. The forecast also suggests a slight decline in the coming week, indicating a potential for further downward movement. Given this bearish outlook, a short position is recommended. An aggressive short-term strategy would involve entering a short position at the current market price of around $3.61. The stop loss should be set at $3.7, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $3.5, aiming to capture a potential decline towards the support level. This strategy capitalizes on the short-term bearish sentiment and aims to profit from the anticipated price decline. Based on the provided price history and forecast for ThetaNetwork, a cautious short-term investment strategy appears most suitable. While the historical data shows some price volatility, the recent 2-week price change indicates a downward trend. This trend is further supported by the forecast, which predicts a continued decline in price over the next week. The support price of $1.23 provides a potential floor for the price, while the resistance at $1.387 suggests limited upward potential. Therefore, a short position is recommended to capitalize on the anticipated price decline. An aggressive entry price could be around $1.35, aiming to profit from a drop towards the support level. A stop loss order should be placed at $1.39 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $1.25, allowing for a reasonable profit margin before reaching the support level. This strategy prioritizes risk management while aiming to capitalize on the short-term bearish outlook for ThetaNetwork. Based on the provided Dogwifhat price information, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements, while the forecast suggests a continued upward trajectory, reaching prices around $2.8 by the end of the period. The volatility suggests potential short-term corrections. Therefore, a medium-term approach allows for capturing potential gains from the overall upward trend while mitigating risks associated with short-term fluctuations. An entry price around $2.37, slightly below the recent peak and above the support price of $2.498, offers a good risk-reward ratio. The stop loss should be set at $2.29, a level that represents a significant pullback, but still allows for capturing a portion of the potential gains. The target price can be set at $2.57, aligning with the forecast and providing a reasonable profit target. This strategy aims to capitalize on the anticipated upward momentum, while managing risk through a well-defined stop loss and a realistic profit target. Based on the provided information for Stellar, a short-term investment strategy appears most suitable. Price history shows a recent dip followed by a slight recovery, with the forecast indicating continued sideways movement with a slight downward bias. This suggests limited upside potential in the short term. Therefore, a short position could be considered, aiming to capitalize on the potential for a price decline. An entry price around $0.0925, slightly above the current price and near the support level of $0.0902, would allow for a potential profit if the price drops towards the support. The stop loss should be set at $0.0936, the resistance price, to limit potential losses in case the price unexpectedly rises. The target price could be set at $0.0902, aligning with the support level, aiming to secure profits before the price potentially rebounds. Based on the provided information about Starknet, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price history demonstrates some volatility, with fluctuations both upwards and downwards. While the forecast suggests a slight upward trend, it's important to note that the price movement is relatively modest. The support price at $0.384 acts as a potential floor, while the resistance at $0.4157 indicates a ceiling for upward movement in the near term. Considering these factors, a long position might be considered, aiming to capitalize on the potential for a price increase towards the resistance level. However, given the moderate forecast and potential for volatility, it's crucial to manage risk effectively. A conservative entry price could be around $0.395, allowing for some room below the current price. A stop loss should be placed below the support price at $0.384 to limit potential losses. A target price of $0.410 would aim for a modest profit while staying within the projected price range. This strategy allows for potential gains while mitigating risk through a well-defined stop loss and a realistic target price. Given the price trends and forecast for Pendle, a short-term investment strategy focused on a long position appears to be the most suitable. The historical prices show a slight downward trend, but the forecast suggests a potential upward movement in the coming week. The current price is hovering near the support level of $3.649, indicating a potential for a bounce back. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price around $3.8. A stop-loss order could be placed at $3.65 to limit potential losses if the price drops below the support level. The target price could be set at $4.12, aiming to capitalize on the potential upward movement towards the resistance level. This strategy takes advantage of the anticipated price increase while managing risk through a stop-loss order. Based on the provided price information for Render, a cautious investment strategy focused on the short term appears most suitable. The 2-week price change demonstrates a downward trend, with the forecast predicting further declines. Although the support price at $5.266 provides a potential floor for the asset, the resistance at $6.276 suggests limited upward momentum. Given this outlook, a short position on Render is recommended. An entry price of $5.90, slightly above the current price and the lowest point in the forecast, would allow for some margin of safety. A stop-loss order should be placed at $6.05 to limit potential losses if the price unexpectedly rises. The target price should be set at $5.20, aligning with the support price and aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the bearish sentiment surrounding Render, while managing risk through a well-defined stop loss. Based on the provided VeChain data, a cautious investment strategy is recommended due to the recent downward price trend and the forecast suggesting further declines. The historical prices show a consistent downward movement over the past 2 weeks, with the current price hovering near the support level of $0.02272. The forecast indicates that VeChain may continue to decline, reaching as low as $0.0228 in the coming week. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.0233, slightly above the current price, would allow for some room for price fluctuation before entering the short position. The stop loss should be set at $0.0237 to limit potential losses if the price unexpectedly rises. The target price can be set at $0.0225, aiming to capture a decent profit before reaching the support level. This strategy prioritizes risk management while seeking to profit from the prevailing bearish trend in VeChain. Given the price trends and forecast for Binancecoin, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a recent downward trend, with the current price close to the support level of $567.6. The forecast suggests Binancecoin could potentially drop further, reaching as low as $559. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. To implement this strategy, an entry price of $568 could be considered, slightly above the current support level to allow for some room for price fluctuation before entering the short position. The stop loss should be set at $575 to protect against any unexpected upward price movement. The target price should be set at $555, aiming to capture a significant portion of the potential price decline. This strategy prioritizes risk management by setting a stop loss order to limit potential losses and aims to capitalize on the short-term bearish outlook for Binancecoin. Based on the historical price data and the provided forecast for Conflux, a medium-term investment strategy appears to be the most suitable approach. While the recent price has shown some fluctuations, the overall trend suggests the potential for upward movement. Forecast indicates a gradual increase in price over the next week, reaching around $0.188. This suggests a bullish outlook for the medium term. Considering this outlook, a long position in Conflux would be advisable. An entry price around $0.175 could be a good starting point, aligning with the current price and the support level. To manage risk, a stop-loss order should be placed at $0.1777, slightly below the support price. This would help limit potential losses if the price unexpectedly drops. The target price could be set at $0.1972, the resistance level, aiming to capitalize on the potential price increase. This strategy allows for a balanced approach, taking advantage of the bullish potential while mitigating risk through a well-defined stop loss. Given the historical price data and the forecast for Worldcoin, a medium-term investment strategy appears to be the most suitable approach. Price history shows a fluctuating pattern with both upward and downward movements. While the forecast suggests a general upward trend over the next week, price is currently hovering near the support price of $1.85, indicating a potential for consolidation or a minor pullback before continuing its upward trajectory. Therefore, a long position in Worldcoin is recommended for a medium-term investment horizon. An ideal entry price would be around $1.88, slightly above the support price, allowing for a buffer against potential short-term fluctuations. The stop loss should be placed at $1.83, just below the support price, to limit potential losses. The target price can be set at $2.1, aligning with the highest point of the forecast and the resistance price, providing a reasonable profit target. This strategy allows for capitalizing on the anticipated upward momentum while managing risk through a well-defined stop loss. Based on the provided information for Avalanche, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a slight downward trend over the past 2 weeks, and the forecast suggests a continuation of this trend with prices hovering around $26. The support price at $23.49 indicates a potential floor for the price, while the resistance at $27.26 suggests an upper limit for upward movement. Given this outlook, a short position could be considered to capitalize on the anticipated price decline. an entry price of $26.50, slightly above the current price and the forecast, allows for a small margin of safety. The stop loss should be set at $27.26. The resistance level, to limit potential losses if the price unexpectedly rises. The target price could be set at $24.50, aiming to capture a portion of the potential downward movement while staying above the support level. This strategy prioritizes risk management and capital preservation, taking advantage of the short-term price outlook without excessive exposure. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with some upward movement, but also periods of decline. The current price is near the support level of $0.7434, indicating potential for a bounce. However, the forecast suggests a downward trend, with prices potentially dropping below the current level. Therefore, a short position is advisable to capitalize on the anticipated decline. An entry price of $0.800 would allow you to enter the trade as prices approach the resistance level. The stop loss should be set at $0.840 to protect against any unexpected price surge. The target price should be set at $0.720, aligning with the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a well-defined stop loss. Based on the provided information about EOS, the 2-week price change suggests a downward trend. The forecast indicates further declines, with the price potentially dropping from its current level towards the support price of $0.465. This bearish outlook suggests a short-term investment strategy focusing on capitalizing on the anticipated price decrease. Given the historical price data and the forecast, an entry price of $0.495 would be appropriate, slightly above the current price but within the resistance range. The stop loss should be set at $0.5057, slightly above the entry price, to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.465, aligning with the support price and allowing for potential profits from the anticipated price decline. This strategy aims to take advantage of the short-term bearish momentum in EOS. Given the current price trend and the forecast for TRON, a short-term investment strategy appears to be the most suitable. The historical price data shows a slight upward movement, but the forecast suggests a consolidation phase with prices hovering around the current levels. While the support price is at $0.1511 and the resistance price is at $0.1577, the forecast indicates limited potential for a significant breakout in either direction. Therefore, a neutral stance is recommended. We can consider entering a short position around $0.156, slightly above the current price, with a stop loss at $0.158 to protect against an unexpected price surge. The target price could be set at $0.153, aiming to capitalize on a potential downward correction. This strategy allows us to participate in the market sideways movement while minimizing risk. Given the provided price history and forecast for Filecoin, a short-term investment strategy appears most suitable. The recent price action shows a consolidation phase after a period of upward movement. The forecast indicates a potential continuation of this upward trend, reaching prices slightly above the current level. This suggests a bullish outlook for the short term. Therefore, a long position is recommended. An aggressive entry point could be around $0.435, aligning with the recent price action and the forecast. A stop loss should be placed below the recent support level at $0.42, limiting potential losses. The target price could be set at $0.48, taking advantage of the forecast and the resistance level. This strategy allows for capitalizing on the potential short-term price increase while managing risk effectively. Based on the provided ShibaInu price information, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating trend, with recent prices hovering around $0.00000170. The forecast suggests a slight upward movement, with prices potentially reaching $0.00000180 in the coming week. However, the resistance level at $0.000020 indicates a potential ceiling for this upward momentum. Therefore, a short-term long position could be considered, aiming to capitalize on the anticipated price increase towards the forecast. An entry price of $0.00000170, aligned with the current market price, would be suitable. To mitigate risk, a stop-loss order should be placed at $0.00000165, below the recent lows. The target price could be set at $0.00000183, slightly above the highest forecasted price, allowing for potential profit taking before encountering resistance. This strategy aims to capitalize on the short-term upward momentum while managing risk effectively. Given the price trends and forecast for Dogecoin, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating pattern with a slight downward trend in the recent weeks. The forecast suggests a slight upward movement, but the price is still hovering near the support level. This indicates a potential for consolidation and sideways movement in the short term. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $0.109 could be considered, aligning with the current price and recent lows. The stop loss should be set at $0.10714. The support price, to limit potential losses. The target price could be set at $0.12795. The resistance price, aiming to capitalize on the potential for a price increase towards the resistance level. This strategy allows for a balanced risk-reward profile, capitalizing on potential upside while mitigating potential downside risks. Based on the provided HookedProtocol price history and forecast, a cautious short-term investment strategy appears most suitable. The historical price data reveals a recent downward trend, with the price hovering near its support level. The forecast predicts continued downward movement, suggesting a bearish outlook for the coming week. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. An entry price around $0.430, slightly above the current price, would allow for some margin of safety. The stop loss should be set at $0.45, just above the recent high, to minimize potential losses. The target price could be set at $0.404, aligning with the support level and offering a reasonable profit margin. This strategy emphasizes risk management and capitalizes on the prevailing bearish sentiment. Based on the provided price history and forecast for Aevo, a cautious investment strategy with a short-term perspective appears most suitable. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. The recent forecast suggests a potential decline in price over the next week. Considering these factors, a short position on Aevo could be considered. An entry price around $0.345 aligns with the forecasted price and offers a potential entry point for shorting. A stop loss could be set at $0.359 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.3204, which represents the support level and offers a reasonable profit target. This strategy aims to capitalize on the potential price decline while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for Notcoin, a short-term investment strategy appears to be the most prudent approach. While the recent price history shows some fluctuations, the forecast suggests a slight downward trend over the next week. This indicates a potential for profit if we enter a short position, anticipating a decline in price. Therefore, a suitable strategy would involve opening a short position at the current market price, which is around $0.0075. The stop loss should be placed at $0.00773, the recent high point, to limit potential losses if the price unexpectedly rises. The target price for this short position would be $0.00715, aligning with the support price and offering a reasonable profit margin. This short-term approach capitalizes on the anticipated downward price movement while managing risk effectively. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.0167. The resistance is at $0.02024, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $0.0193 would be ideal, aligning with the current price and recent price action. The stop loss should be set at $0.02024 to protect against any unexpected price recovery. The target price should be set at $0.0167, aligning with the support level, allowing you to take profits before the market hits major support. This strategy aims to capture a potential short-term decline in Suncoin's price. Given the historical price data and the provided forecast for Pepecoin, a short-term investment strategy appears to be the most suitable approach. The historical prices show a recent upward trend, but the forecast suggests a continuation of this upward momentum, with prices potentially reaching $0.000112 in the coming week. This indicates a bullish outlook in the short term. Therefore, a long position is advisable to capitalize on the potential for a price increase. A suitable entry price would be around $0.000097, aligning with the recent price action and below the predicted peak. The stop loss should be set at $0.000095, the identified support price, to limit potential losses. The target price could be set at $0.000110, providing a reasonable profit margin while staying within the projected price range.